Hello everyone, and welcome to today's Lunch with NAIOP webinar. Before we begin today, our NAIOP Vancouver Director at Large, Paul Tilbury, will say a few words.
Hello everyone, and thank you for joining us today. We're pleased to be continuing our webinar series with the topic that is top of mind, insurance and COVID-19, navigating the crisis. Before we go any further, I'd like to thank our Platinum, Gold, and Patron sponsors. Sponsorship ensures that we can provide important, timely support to the local commercial real estate community, including bringing you today's relevant topic and subject matter experts to help keep you informed. We could not deliver this important value without our sponsors, and we thank you all. We encourage you to follow NAIOP Vancouver on social media to stay informed of the many national and local resources on offer. As an example, in order to lend support to NAIOP members through the shutdown, NAIOP Corporate has made its on-demand courses free to members. Originally offered through the 1st of June, this has been extended to August the 1st. This represents a tremendous value, and we hope you will go to naiop.org to find out more. I'd also like to mention that next week on June 4th, we have a special 1-hour lunch with NAIOP installment for you. Joining us will be NAIOP President and CEO, Tom Biscaquino, and Larry Lance, the 2020 Director of NAIOP. Joining Tom and Larry will be our local president, Jason Kisselback, who will lead a discussion on NAIOP's response to COVID-19 and the state of the market from the point of view of our well-connected guests. Please plan on joining us next week. Let's get started now with what is going to be a very informative half an hour. Our moderator, Rachel Hutton from Stikeman Elliott, and speaker James Clay from JT Insurance will discuss the things you need to know today about insurance. If you have questions for Rachel and James, please use the Q&A function at the bottom of your screen. I am happy now to turn our session over to Rachel Hutton. Thank you.
Hello, everyone. Welcome. Insurance and COVID. Well, insurance is about preparing for the unexpected, and I think we all agree that where we are today is quite an unexpected place. So I was thinking about what's in your medicine cabinet, and when you reach for it to find out what's there, how does it work, and what am I missing? So I've been speaking with James over the past week or so about making things clearer for everyone. And as with any COVID-related presentation, we have to look at where we were, where we are, and where we will be moving ahead. So James' presentation will, at the end of the day, clarify some of the limitations to insurance, what insurance can do, can't do, but best practices looking ahead and navigating the uncertain waters in which we find ourselves. So with that, I'm going to bring up the screen. And as you'll expect to hear from both a lawyer and an insurance consultant, today's presentation doesn't constitute advice for your specific insurance needs. So we would draw your attention to the typical disclaimer and urge you to seek advice from your own insurance advisor and legal advisor as to your specific insurance needs. A rough overview, as I said, we're going to look at the market before COVID. We're going to look at the application of business interruption insurance, third-party liability and D&O, and certain risks that are presenting themselves that are very unique to this time with everybody working remotely. Paul will also address some of the issues presented by vacant and unoccupied locations, which is a current circumstance and may well continue. And of course, then the path forward. So with that, I'll turn it over to you, James, and ask you to let us know where we were on the eve of COVID.
All right, well, thank you very much, Rachel. Obviously, this is a very difficult time in the insurance market, and I guess I wanted to just highlight that COVID-19 is not the reason that we're in a hard market. It's definitely been amplified, but if we go back to the last quarter of 2019, the market had already started to turn. So we had been in a very soft market since 2001, so September 11th, and a soft market by definition is characterized by low or competitive insurance premiums, lots of capacity, relaxed underwriter scrutiny, and lots of competition. And over the years, the insurance companies have invested those premiums and sought returns, and that's primarily how most of the insurance companies make money, is not in their core business, but actually investing those premiums. But global losses, particularly weather, is probably the one that's been the most challenging. You think wildfires, you think the flooding in Alberta and so forth have really been quite severe and have contributed to the losses globally, which has caused the market to make quite a tight turn. Further complicating that is a lot of people, both in your industry and our industry, have never experienced a hard market before. So it's very difficult for everyone. And the construction costs are certainly not increasing at the pace that they were in the past. They still are, of course, increasing to a certain extent. Underwriters are looking at about a 4% inflation. But the area that's probably got the most press, and for those of you in the West, residential realty like strata corporations have been particularly impacted. Prior to COVID, strata corporations were seeing anywhere from 30 to 300% increases in premium, and deductibles were increasing dramatically, particularly on perils like water damage to $250,000, $500,000 and above. So certainly residential realty has been impacted, and underwriters are being a lot more selective with that class. For your buildings, frame construction, both new construction and existing frame construction, capacity is definitely very challenged. Underwriters, I mean, there's certainly capacity available, but underwriters are being a lot more selective in how they deploy that capacity. And then, of course, older portfolios, if you haven't had the plumbing, heating, electrical, and roof updated, some markets will now no longer participate. So very challenging conditions, and COVID has amplified that, and we expect these conditions to continue through 2021.
Thanks, James. And I suppose then we enter the realm of COVID and the lockdown. And I think my top of mind question for insurance certainly is the application of business interruption insurance. And I think here you may identify for us some misunderstandings or assumptions that weren't quite right. So I'll take you to that next slide.
So I guess I would start off with that pandemics are fundamentally uninsurable events. If you think about it, there's no geographic limitation to a pandemic. There's no time limit, not like a hurricane or a fire that would affect a certain location for a certain time limit and could be predicted. That's not to say that pandemic coverage is not being provided. It absolutely is. Paul and I were having a discussion yesterday about Wimbledon, who has been paying $2 million in premium for the last 17 years, so $34 million to date, and they will be claiming $141 million this year for the cancellation of the tennis. So if you think large fires like the Olympics and others, travel, they're definitely credit insurance. They're definitely going to be claims paid, but for the most part, everyone's focused on the business interruption of their tenants. And the key point there is that business interruption is not triggered unless there's physical loss or damage. And so there's been arguments made that if a facility has been infected, that would constitute physical loss. And perhaps the argument from the other side would be that that's easily remediated and cleaned, and the actual business interruption loss would be minimal. I think that Rachel and her industry, there'll be numerous lawsuits. We've already seen substantive class actions both in Canada, the US, and abroad as this is worked through. And again, everyone's circumstances is different. And I'd also remind everyone that the vast majority of your tenants are not suspending operations because they've got an infectious outbreak in their facility. It's as a result of social distancing to prevent the spread of COVID-19 as advised by health authority. So our advice, which is most likely similar to the advice you've received from your own brokers, is that clients report all claims. Despite the fact that I've told you that I don't think coverage will be triggered, we are recommending that everyone put a claim in. And the reason for that is in 2001, back when we had terrorism issues and everything ground to a halt from a liquidity perspective, the federal backstop in the US set up the TRIA, which is the Terrorism Risk and Insurance Act. And one of the requirements of that act was that you had availed yourself of all other commercial terms of relief, including insurance. And ironically, the most recent rental relief program that the Trudeau government just announced has the same language, and I'll read it to you. The owner is sought to obtain any insurance proceeds available to it in respect of any impairment of the rental revenue from the property. So for those of you that would be participating in that program, at some point you could be audited in the future, and you're going to need that denial letter to show that you've exhausted that option. The flip side of it is, and for your tenants as well, there is some coverage that's available. I know that locally there's a dental program in Canada that has provided some coverage. Some restaurants have had coverage provided under their policy, albeit very small amounts, I think $25,000 per location. But we also want to make sure that the insurer is determining what coverage is available, not the broker. So even $25,000 is beneficial for you or your tenants, and we want everyone to avail themselves of any and all available coverage. We don't know if the industry or government is going to create a solution here in Canada. I'm very confident there will be a solution similar to TRIA in the United States, but I would, if you have not put in claims, I would recommend you do that very quickly. As these relief programs evolve, more and more people are going to be going to the insurance companies to seek that denial letter, and you don't want to get caught up in the line of people trying to get it all at the same time and be in a timely fashion. So that would be our advice: report all claims for all lines of business.
Thanks, James. You mentioned that that you have seen and will expect to see a surge of claims. So let's move to the next slide and drill down on that a bit further. Can you please outline for us, and I know you will, the kinds of claims we're seeing, as well as some of the particular risks that are raised by the current circumstances?
Sure. So, the business interruption is the one that's getting the most attention, but we do need to sort of look at some of the other areas that maybe you haven't thought of. The first being third-party liability. I think of it very similarly to slip, trip, and fall or snow removal. Under the Occupiers Liability Act, there are responsibilities there, and the same premise would occur if you could be shown as a landlord to expose the general public, fail to manage an outbreak at your facilities. I know previous speakers have talked about going back to work and what that means. I think from a business perspective, our advice is, make sure you've got your protocols and procedures down pat before you go back. That's not something that I would rush, and you'll be able to. You can't eliminate the exposure, but certainly reduce the exposure. Obviously, the courts are slowly reopening, but I do see an uptick there in tenants and other third parties taking a run at landlords. And the other issue that we've seen, and I think you've probably seen with your tenants as well, are non-traditional uses of property. So you might have had a manufacturer of widgets that all of a sudden was manufacturing PPE equipment, and they've amended that, and it's probably a very good time to revisit those tenants and see if everything is the way it should be. And for those landlords that haven't been checking the certificates as required under the lease, another good time to make sure everything's in good order and that you do have the covenant of the tenant's insurer in the event there's a problem. The other item I'd highlight is directors and officers liability. Again, I don't think that coverage would be triggered in most cases. However, that doesn't mean there won't be claims in that area. And the examples of those types of claims specific to employees, I think in Canada, that's the leading cause of loss in Canada. And certainly with furloughs and many companies using the umbrella of COVID-19 to deal with their employees, you want to be extremely careful there. And I think any disgruntled employee or groups of employees will be pursuing directors and officers. The next item to highlight, obviously, we're all working from home. Cyber risk is something that continues to surprise me, how few companies actually have a cyber risk protection. It's incredibly important. I think it'll probably be something that more companies will be taking a closer look at now. But if you think about it, everyone's working from home, and their kids have online gaming. That's usually the weakest link in the household, or Internet of Things like Nest cameras and Ring doorbells and so forth. And the unsavory types are able to access your systems in a way that they perhaps couldn't behind a firewall at your offices. So a very good time to go back and reevaluate all of that and make sure that you've got very good control over sort of the new way that your teams are working. And a reminder about privacy legislation that, you know, you may have your data in the cloud, you may be using Microsoft Exchange or other software solutions like that, but you're responsible for where that data is. So maybe in Washington State, maybe in Texas, you've got to make sure that you're addressing all of that. And more, we've seen a huge uptick in phishing claims and cyber issues, and click on this and click on clickbait and so forth. So just to remind your employees and your tenants to be extremely vigilant. And I put Zoom in there. We all know about some of the issues with Zoom. Obviously, they fixed it. I haven't been Zoom bombed yet. So, but absolutely something that you want to address. And then I guess the last item are vacant and unoccupied locations. Both from a construction point of view, we've seen a lot of construction sites that are not occupied at the moment. And yes, you know, I drove down Roxon Street the other day, and the boards are coming down. Not everybody's going back, of course, but really, really important that the insurance company is in the loop on that one. And in a general sense, the carriers have been great. They understand the situation. I'm from the old school. I like to document in advance of an issue. So despite the good nature of the carriers, you want to make sure that they're aware that it's been vacant or unoccupied for more than 30 days. They're going to be looking for routine checks of the premises, making sure that you've shut off domestic water, not the sprinklers, of course, but if you've got any uninstalled machinery, that it's removed from the premises. Heavy machinery, of course, would be fine, but just be aware of that, because that's a vacant and unoccupied for more than 30 days is something that is hit everybody at the same time, and I don't know that everyone is necessarily aware of that. So just keep an eye on that.
Thanks, James. Are you seeing circumstances where there's a failure of coverage? For example, if tenants or subtenants have abandoned the premises and gone insolvent so that they're not paying their premiums anymore? Any gaps in insurance presenting itself as a risk to landlords?
It's definitely a risk, and that's why I think the communication is so important. The industry has taken a very positive approach, but we've seen a differing approach across the country. So, for instance, using auto as an example, some carriers are recognizing that cars are not being used for business anymore, or they're certainly not being driven as much, and they've automatically granted premium relief and amended the rate class. I don't know that's happening here in British Columbia as an example. So I would err on the side of caution and just make sure that the carrier is advised in advance, and you can work through it from there. But for the most part, we haven't seen a denial yet, and we've seen carriers being extremely accommodating.
Thank you. So just keeping a brisk pace given the time constraints, we'll start to look at the path ahead. And one item I was wondering if you could include as we move to the next slide is best practices for the policies. So if you have a policy in your workplace so that you can defend yourself against a claim of negligence for, say, allowing someone sick to come back to work and infecting others, what's the best resource for those kinds of parameters? Does that come from the insurance industry? Can they offer help?
Absolutely. The brokers are extremely capable, and you want to, this is the time where you really want to access the expertise of the broker. I think, you've got to look at the brokers not just being on the transactional side, but on the risk management side. And there's a tremendous amount of value in discussing all of this and working in partnership with the broker. And I'd say also in partnership with the carrier. We often talk in our industry of wanting to have the client and the underwriter together. The reality is that doesn't happen. In this particular situation during a crisis, and we saw it on September 11th, that's something that you should be really pushing for. The underwriters need to understand your business. They need to understand the challenges, And I think there'll be a lot more empathy with regard to the situation if you involve them. I've put a few points here on the slide, more of interest. Lloyd's has noted that they're going to reserve as much as 4.3 billion as a result of COVID-19. That doesn't surprise me. That's a market that would probably be writing the Wimbledon program and others. They're a specialist market. So certainly there are going to be substantive claims for the marketplace, which unfortunately just adds to the difficulties we're having with the hard market. The next item there is actually a quote with respect to September 11th, with respect to terrorism. And I noted that it's exactly the same movie here with COVID-19. And I also note future pandemics. I think there's a sense in the industry that we may have a second wave, and that perhaps infectious diseases are something that we're going to have to deal with in the future, and not just this particular strain of COVID-19. So something to be aware of. I talked briefly about government having to come in and act as a backstop. There's definitely movement there in the United States. As recently as this week, there's a proposal for the Pandemic Risk and Insurance Act, PRIA, which is very similar to TRIA. And I think that will probably have the greatest chance of success. And I'm hopeful that NAIOP, and I know other organizations like ICSC and so forth, are lobbying the governments in both countries strongly. But I think that would probably provide the most help to business if they could have some sort of a government backstop. As I said before, businesses are struggling with the hard market. Now they've got that overlaid with COVID-19. But as you, and carriers, again, I said have been great. I mean, they're waiving minimum retained premiums. They're offering flexible premium payments. They're definitely working with insureds. But I would say, as landlords, rather than being the first, I know you want to be a good corporate citizen, but rather than being the first one, you want to make sure your tenants are exhausting all of that relief as well. And so that the landlord's not bearing 100% of that relief, that they are also exhausting anything that might be available to them.
Thanks, James. So now if you can take out your crystal ball and tell us exactly what's going to happen in the path ahead. Now, I think there's a few certainties here that you're going to clarify as to what people can expect on the front of deductibles and premiums, but there's other things that we can only speculate at this time. Over to you.
I think we're already seeing that the global property market is continuing to be challenged. Real estate's been hit very hard, particularly catastrophe-exposed real estate. So on the West Coast, you think Richmond Delta, anything that's exposed from a quake perspective. So we're definitely seeing not only higher deductibles on earthquake, but also on all lines of coverage, being the general property and general liability. We're seeing loss limits being put on earthquake and flood. And so I think the message I would say is, depending on the appetite of the client, you may be better off with a higher deductible, but I would not want you to compromise your coverage. And again, this comes down to communication with the broker and the underwriter to figure out what the best or the most optimal program is for your facility and program.
Okay, thank you. And our very last, sorry, there we go. Back here, best practices.
I can speak to this one as well. I mean, during the soft market, there weren't a lot of applications, not a lot of inspections. They were quite happy to just take the premium and reinvest it. That obviously has changed. And I would say that the more cooperative you are with these virtual inspections and any inspections that they're able to do physically now, do nothing but help you. The more cooperation you have with the underwriters, the better it's going to be for you. And I referenced it earlier. We have an entire industry who's not experienced a hard market before, and so they don't necessarily know all of the answers. And so it's very, very important. I put down at the end there, question with curiosity. There's no silly questions. There is a strategic outcome that can be achieved if you ask those questions and work with the underwriters. I know we're starting our renewal process 120 days out. We want to ensure that no stone is left unturned, and we're expecting that there's going to be issues that arise during the process. For larger portfolios that are syndicated, certain carriers may not want to participate moving forward, and you've got to anticipate that. So The more information that you can share, both positive enhancements to your buildings and concerns you may have, the better. And I know in your industry it's location, location, location. I would say, for us moving forward, communicate, document, and question with curiosity. And just on the documentation piece, a large number of clients are establishing distinct account numbers in their GL to record expenses that are unique to COVID-19. They're tracking those costs, keeping track of, their occupancy, both projections and actuals, any cancellations and so forth, just to make sure you have a clear understanding of exactly what the impact has been on your portfolio.
Thank you. And I think one thread that's gone through the entire presentation that you've given is the how essential it is to have that open and helpful relationship with your broker. Now, there's nothing to test a relationship with a consultant like a disaster or a pandemic. What about people who find they're not getting the help that they need and they want to make a change? But they're thinking this might be the worst time to do that. Do you have any advice to give people on that front? They may feel after this presentation they need to go out and find someone different to guide them.
Well, I think there are numerous capable brokers out there. You really want to make sure you're dealing with the larger brokers that are dealing with the most secure carriers. So I know, for instance, in our office, we have a market security. We can't deal with any of the smaller insurers. And so, really, it's something that is unique to each client. And there are definitely lots of brokers that are capable like us that are out there. I think the relationship's really important. You really need that relationship right now. And I wouldn't, I would let the broker do the job they have to do. It's hard enough right now securing capacity without going through a whole process. So I would say rely heavily on what you've got. And if you're not satisfied, there are numerous very qualified brokers out there.
Okay, thank you. I'm just checking, and I don't believe I see any open questions at this time. So should anyone have any questions, please don't hesitate to reach out to James. And James, I think that you've helped put meat on the bones of this topic, which has become so important during this time. Thank you very much. And I think that wraps it up for today.
Yeah, thank you, Rachel and NAIOP for the opportunity. These are very difficult times, and I said to our own team at the beginning of the crisis that how we conduct ourselves during this crisis will inform our brand moving forward. And I think that the real estate industry and the insurance industry are great industries. We will get to the other side, and we'll be stronger than before we entered. We've just got to go through this process.
Thanks, everyone.
Thank you very much.
That concludes today's webinar.
Thank you.
Thank you for joining us
safe.
today.
Take care.
Please join us again next Thursday, June 4th, for the next Lunch with NAIOP webinar.